is all about the future, right? No company is valued on past performance or what happened in the past. It's only valued on what's happening in the future. So if you're facing a choice, you can listen to like the story the picture I got them just painted, which is about a company is that visibly barely knows how to make a car and how to sell a car and how to manage the transition of the world towards like a renewable economy. Or you can listen to what the company that set as a goal, which is 20 million units and it's our tires of energy storage capacity that they want to roll out ASAP. So what does Tesla look like with that kind of master plan being executed? Sure, that $700 billion of revenues in autos like to $300 billion of revenues in energy storage, we are talking $1 trillion in revenues. It's a very high margin business, right? Tesla has demonstrated they can do cars very efficiently and different very, very good margins. So you're taking $300 billion of EBIT, which for a company growing reasonably well, can trade on it 25 times, maybe multiple. So music of market cap on achieving that vision. So that leaves the stock Quizlet of upside. Okay. And let's see what happens in China in the next few months for Tesla and see how it stacks up against Gordon's perspective. All right, in the fourth quarter of 2022, Tesla's earnings per share increased by around 40%, while sales for 2023 are expected to be 50% higher than what was recorded last year. Several macro challenges may still disrupt Tesla's growth story this year. After a rather tough year in 2022, Tesla's stock price seems to be recovering with more than a 100% price increase from $101 to above $200 per share in the first quarter of 2023. Going by that rate, which Tesla has been increasing, several analyses have predicted that this will turn out to be good for Tesla investors this year if the company doesn't hit any unprecedented crisis. So can Tesla shares really make investors rich in 2023? We're about to find out. Hey guys, welcome back to Tesla Tomorrow. Tesla's stock price crashed last year due to various reasons, including rising interest rates, production challenges, and Elon Musk's involvement. Twitter, the Federal Reserve's interest rate hikes have reduced market liquidity, impacting high-growth stocks like Tesla more significantly than traditional companies, which had increased interest rates multiple times last year owing to the increased risk of inflation and the economic recession. Tesla's 2022 growth projections were hampered by the temporary shutdown of its Shanghai factory, which accounted for about 40% of total production due to rising coveted caterers. The car company faced issues with its new factories in Germany and Texas, leading to fewer cars being produced in these facilities. Musk's Twitter deal also weighed on Tesla's stock, especially since the CEO was selling Tesla shares to fund the purchase of his new company. Tesla's underperformance compared to the broader market has been partially attributed to Elon Musk's uncontroversial actions, primarily in terms of his involvement with Twitter. Fortunately, things are starting to look good for Tesla, again as the stock price rallied almost 100% in the first quarter of 2023. But will things continue to stay positive for the rest of the year? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe to our channel, and turn on notifications to keep up to date on everything happening with Tesla. Tesla has retained its position as the top seller in the market. Its car deliveries reached an all-time high of 3 million vehicles delivered in 2022, up 40 from the year before. Tesla's revenue grew to nearly $81.5 billion in the 2022 fiscal year, a 51% increase from 2021. Analysis claimed that the rise in Tesla's stock price was due to factors such as price reductions in China, U.S. government tax cuts, and better-than-expected earnings reports from Tesla, despite the entry of more electric vehicles in the market. Tesla stands at the forefront of the growing electric vehicle market and the renewable energy market. This position for the company shows immense growth, making it an attractive investment opportunity. During Tesla's recent Investor Day, company CEO Elon Musk revealed Tesla's future plans, stating that the automaker plans to build a new gigafactory in Mexico and produce 20 million electric vehicles per year by 2030. The Cybertruck is also set to be released this year, and future models are expected to be much cheaper due to the improved production efficiency. However, since global events create uncertainty and an impending recession still looms, there may still be some doubt as to whether Tesla stock is actually the best pick for 2023. But let's hear what experts have to say. Tesla investor Dan Ives had previously said that Tesla stock could rally 35% this year since its recent price cuts have already been a huge success in China. Tesla has cut prices in China twice as the company continues to face sluggish demand. These price cuts were aimed at increasing Tesla's demand, especially now that competition in the EV sector seems to be growing at a very fast rate, according to Dan Ice. Tesla's recent price cuts are a huge success story so far. He added that China represents the core of the Tesla global growth as a visionary leader set the company apart in the industry, driving its continued success. And as the EV sector continues to expand, Tesla is poised to reap substantial benefits from this growth. Tesla also has increased liquidity and institutional support following previous stock splits. Tesla shares have become more liquid and available at a lower price with strong backing from institutional investors in its recent notes. And Stanley reiterated his previous stance that 2023 is likely to be a reset year for the EV market as supply is expected to exceed demand. We believe 2023 is shaping up to be a reset year for the EV market, where the last 2 years of demand exceeding supply will be substantially inverted to supply exceeding demand. Morgan Stanley Analysis sees an attractive entry point in Tesla as the stock continues to trade higher. However, although it reiterated an overweight rating on Tesla stock, it had previously cut its price target to $250 from the prior $330 per share for a bear case scenario where Tesla is unable to meet up with the expected EV demands in the future. Morgan Stanley Analysis Adam Jones believes that Tesla can thrive in the competitive EV market. He said that players who were self-funded with demonstrated scale and relatively low costs throughout the supply chain, like Tesla, can be relative winners in the EV space. Tesla has grown fourfold in 4 years, and assuming that the car company continues to grow at this rate, we will see the stock price reach around $1,000 per share by the year 2027. The Gigafactory ramp is one of the catalysts that identified Tesla's future potential, and this was done by Dan Ives as Tesla plans to announce new Gigafactories in the next few years. At Tesla's annual stockholders meeting, Musk said he thinks Tesla could eventually build as many as 10 to 12 new Gigafactories globally. The CEO also mentioned that Tesla could produce up to 20 million electric cars per year by 2030, with each factory producing between 1.5 and 2 million units per year. Currently, Tesla has U.S. Gigafactories in Vermont, California, Sparks, Nevada, Buffalo, New York, Austin, Texas, and others outside the U.S. in China and Germany. To achieve 10 to 12 Gigafactories, Tesla would need to build at least 3 to 5 new Gigafactories in addition to the one Musk says the automaker could announce this year. And with the automation of these Gigafactories, production may hit record-breaking levels. However, while it is evident that Tesla is well poised to experience significant growth this year, it is important to remember that this is only a quick assumption with minimal factors. Tesla stock has been extremely volatile recently. It took 2.5 years for the stock price to grow more than 30 times, but it only took a year for this massive 75% drop. Musk said that while the cost of production is falling in both the Texas and Berlin factories, macroeconomic factors still hinder Tesla's continued stock price growth. Although Tesla has encountered production challenges in the past, any inability to meet product demand could negatively impact the company's revenue and profitability, raising concerns for potential investors. There is little to no chance of seeing Tesla make a 10 times stock price rally within this year. Some major analysis believes that it could reach $230 per share at best, but a 10 times rally in the future is possible if it has overcome its obstacles. In reality, things don't always work out as planned, especially for an extended time frame. Many factors will change along the way, so it's always important to conduct your own research as an investor to decide if putting your funds in Tesla is a good option for you. Do you think 2023 will be a good year for Tesla? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen.